And for more, we're joined by Peter Andersen. He is Chief Investment Officer at Andersen Capital Management. Peter, thanks for your time this morning. Let's just take a look at earnings season. So 85% of the S&P 500 companies that have reported earnings so far, they've beaten expectations, yet the stock market seems to be, I suppose, struggling to make further headway in hitting new records. I mean, the S&P 500 managed to squeeze out a small gain, but NASDAQ has ended a six-day streak of records. So what is driving this disconnect?
Usually you are correct that the earnings results like that should drive prices higher and the index higher. However, it's very different now because of all the moving parts, all the crises that we're discovering along the way. For instance, the Federal Reserve Chair. That debacle right now has distracted a lot of investors. And of course, there's the tariffs, and then there's international conflict. So we find ourselves, even though most companies appear to be doing very well, we find that they are operating within an environment of, I would say, the most uncertain environment that we've had in some time. You know, we thought it was hard during COVID to figure things out, but at least it was just one topic. Now we have several topics that can have a direct impact on the next several years, frankly, at least the next several years of how the economy plays out. And I think investors are struggling trying to factor all that into their outlook. And as a result, you see caution is prevailing, not necessarily mindful optimism.
Right. Just to stay on the earnings topic a little bit more, Tesla, Alphabet, they are going to be issuing their earnings results soon. And what will you be looking out for? I mean, you know, these two companies, very, very different. Tesla, the big issue, you know, on investors' minds is, of course, Elon Musk and his political ambitions. And then for Alphabet, I think the biggest issue is its AI spending and whether it's, you know, borne some fruit. And what will happen if Alphabet still fails to capture, you know, this so-called AI enthusiasm that it's seeing among its peers?
Exactly. I mean, let's just talk about Alphabet first. So Alphabet is in a very stressful situation because, of course, they are always, of their earnings calls, they're always defending and really postulating that it's going to be great results with artificial intelligence and the vast amounts of money they are spending on that. Yet, time is not their friend. Time is their enemy. We will have to see. Investors are growing more impatient, although they still have patience. But we can see that it's seeping into the scenario that investors want to know, when will all this investment in AI infrastructure actually pay off to a stockholder? And we are not really seeing any practical demonstrations of that yet. And we will be listening very carefully for what their narrative is about when to expect to see the results of all this AI infrastructure spending. It is an enormous amount. It is quite a bet. And so far, we are really coming up fairly thin with any valid demonstrations. And as to Tesla, that's a whole, as you said, that's a whole different story. I think the focus on Tesla will be just what is Mr. Musk's intentions, announcing a new political party, the American Party. There are so many things that he's made more complicated for himself that, of course, it translates into confusion for the investor. So these are two very different companies, but two companies that have some very serious issues that they need to carefully communicate with investors if they want to be successful.
And just going back to your point that you brought up on the Fed, I mean, there is growing pressure now further from Scott Bessent as well on the Fed, you know, to cut interest rates. I mean, what does this mean for the market? What are market implications? How are they going to affect investor sentiment? As we're seeing already bond yields falling even as those stocks are hitting records. I mean, does this raise your alarm bells about a more cautious Fed outlook, or, you know, is this more about growth expectations?
Yes, I think the answer has to be embedded in the current circumstances. So the fact that we're battling with the tariff calculations complicates the economic outlook. And for a Federal Reserve to pretend that they understand this better than the rest of us, or speculate that they know the outcome, that really isn't a productive, responsible position for them to take. I think that they just have to be on hold. Unfortunately, they cannot make any movements in interest rates until more of this scenario, especially the tariff scenario, plays out. Because there is speculation that tariffs will be a drag on the economic growth. Other people think that it will have no effect. And I think we will have to wait and see, once the tariffs are in place, what the impacts are before a Fed can responsibly make any decision. And with regards to the narrative about should the Fed be fired promptly, I think that is something that should not materialize, because that would just throw another monkey wrench, as we say, into the works in terms of formulating the confidence of the Fed, the independence of the Fed, and how the U.S. economic system, the monetary system works. I mean, it's very complicated, and to throw that additional aspect in, I think will make it even more complicated than it is.
All right, Peter, always good to have you on. Peter Andersen there, Chief Investment Officer, Andersen Capital Management.